bet you keep hearing that Hamilton's housing market is dead. Nobody's buying, prices are falling, and you should probably wait it out if you're thinking about buying. But here's the part that people don't realize. By the time you start to notice that things pick back up, you've already missed the bottom. Plus, I've been telling you for years not to try to time the market. And please don't take advice from people like this. In June, more homes actually sold in Hamilton than the same month last year. That's the first time we've seen that in a while. So while people are sitting on the sidelines, and with good reason, I get it, you've been waiting for some kind of signal. Well, prices have come down, and so buyers have been buying. It makes sense. The market never really stopped. People still move. You just need to decide if that's something that you're ready to do. And maybe this will help as I walk you through the market update for June 2026 now that we're in July. But just quickly to recap, on June 10th, the Bank of Canada held its rate at 2.25%. That's the 5th time in a row that they held. Prime is sitting at 4.45%. And the next rate decision lands on July 15th, which is right around the corner from this update. Most economists are expecting another hold. And here's why that matters for you. For over a year, the number one thing that's kept buyers frozen was, let me wait for rates to drop. That excuse is basically gone now. Rates have been flat for months, and they're historically reasonable at this point. They're not spiking, they're not diving, they're just kind of sitting there. And when rates stop being the story, people stop waiting on rates and start looking at price a little more, which brings us to our update. Starting with the number that surprised me the most. Across all Hamilton property types, 551 homes sold in the month of June. That's up about 6% from the same time last year. That may sound kind of small, but it's really not. For the last couple of years, almost every month has been down compared to the year before. Buyers pulled back hard after the rate hikes following the biggest run-up in home prices of all time. So the fact that June flipped positive, even just by a little, tells you something is shifting a little bit under the surface. It's not spread evenly. If you break it apart, single-family home sales were actually down a bit, about 4.5%. That's good for you, first-time home buyers. There's move-in ready homes sitting there for like $500,000. That's something we didn't see not too long ago. But townhomes and condos, sales jumped almost 19% year over year. That's a big move. Nearly 1 in 5 more condos and townhome sales than last June. That tells you exactly who's coming back into the market first. It's the buyers who got priced out during the peak. First-time home buyers, people who need to get in under a certain number, folks coming from a rental, those moving from the GTA. When those buyers start moving, they move on the entry-level stuff first. Condos and townhomes in places like East Hamilton, Stony Creek, and the Mountain, that's leading the activity right now. But to circle back to rates for just a second, because this is where it all connects. When the Bank of Canada holds steady, variable rates hold steady, and fixed rates get more predictable, lenders can price with confidence and buyers can budget with confidence. The mortgage guys that I follow are seeing purchase activity climbing month over month right now, and it's not because rates dropped. It's because buyers got tired of trying to time that bottom, like I said, and they decided to move on the homes that make sense today. If you're actually ready to buy, let me know in the comments what you're waiting for at this point. Stable rates plus softer prices is a combination that's actually getting people going, which is the opposite of what most people assume is happening out there. Okay, now on to the number you actually clicked for. The typical Hamilton home in June sold for about $70,000 less than it did a year ago. The median sale price across all property types came in at $665,000. Last June, that was $735,000. That's a drop of 9.5%, and in real dollars, it's $70,000 off the middle of the market. And to break it down by property type, a single-family home, the median was $730,000. That's down about $70,000 from last year. Townhomes and condos, the median was about $588,000. That's down from $62,000. So no matter what segment you're looking at, the typical buyer today is paying tens of thousands of dollars less than they would have last summer for the same kind of home. Let that sink in while you sit on the fence. The market handed you a $70,000 price cut while you have people out here saying it's a bad time to buy. But there's a twist that you don't want to miss. You'd think with prices down, the shelves would be overflowing with listings. They're not really. And this part matters for timing, because what we had naturally was more listings come to the market in spring, but new listings in June were down about 9% year over year. Total inventory, the number of homes sitting on the market was down almost 10%. So there are fewer homes for sale than there were a year ago. What's happening is sellers are looking at these prices and deciding not to list if they don't have to, which means that buyers who are active right now are competing over a thinner pool of homes than you might expect. The demand is quietly rebuilding while supply is quietly shrinking. That's not really a dead market. That's a market setting up for a possible move up. I'm not saying it's going to go crazy, and I'm not saying it's going to happen tomorrow, but these are simple economics. Now, if you're a buyer, this is a window you could be taking advantage of. You've got lower prices, stable rates, and less competition than the peak. But inventory is tightening, and the entry-level stuff is moving fast. Windows like this don't announce when they close, but they do close. And if you're trying to figure out which Hamilton neighborhood actually fits your budget and your life right now, I put together an Honest Neighborhood guide that breaks down the pros and cons of each area, the stuff that you don't always get from a listing. It's free. There's a link in the description to grab it. Now, if you're selling, it's a different conversation. Homes are taking longer to move. Average days on market in June was 38 across all property types. That's up about 15% from the same time last year. For condos and townhomes especially, it stretched to 48. That's up 23%. So the days of listing on a Thursday and having offers by a Sunday are over for most homes, unless you're move-in ready, priced right in a great area. Those sellers are getting about 97% of their asking price, not 100 and not over asking usually. The last 3% is the gap between what sellers hope for and what buyers are actually willing to pay right now. And if you fall outside of that, forget about it. Now, the honest read for sellers, you can still sell and sell well, but the strategy is different than it was in previous years. Price it right out the gate. Not, let's just see what happens, because the overpriced listings are the ones sitting for 60, 70, 100 days and then chasing the market down and then getting less than you would have if you've just priced it right the first time. The homes that are priced correctly and shown well are still moving. They sell. People move. The ones testing the dream number are sitting and getting stale. Now, one more number, because it kind of reframes the whole thing. The Housing Affordability Index in Hamilton is up more than 14% year over year. So in plain English, the typical household can afford more home today than it could a year ago. That's lower prices and stable rates working together in your favor. We spent years talking about how unaffordable Hamilton got. This is the first real stretch where that's actually moving the other way. Not because incomes exploded, but because prices came down to earth a bit and rates stopped climbing. If affordability was the thing keeping you out, the math is genuinely different this summer than it has been in a long time.